Cast is now starting. All attendees are in listen-only mode.
Hi everyone, welcome to the webinar. Ron here at Ablesys. We'll go over the different, go over some charts, and the main thing is we just, I just want to make sure you know where to get in, where the able trend buy signal is, where the sell signal is, where you put your stop loss, no trade zones, and it doesn't matter what chart we look at because it's all the same. I mean, it's always the same rules, the same colors, same dots. For every chart, and the software works the same for whatever you like to trade. Everybody uses Able Trend for something totally different. It's popular for intraday E-minis, mini NASDAQ. We like real choppy day to day, but I mean, yesterday, the day before, and then Thursday, the first 3 days of the year were fantastic. And then you get a day like today, they throw in at you, and nothing you can do about that. It's the way the market is. Nobody can control the pricing or anything like that. Luckily, we have the no trade zones. The no trade zones are the best feature in Able Trend. That's what the difference between that and everything else. That's why it's so, so well liked. Because of the no trade zones, it keeps us out of trouble. On a real choppy, ugly, difficult day where everybody loses, it doesn't matter who you are, and that's part of the trading business. We don't like it, and I hate it, but it's part of the game. They're gonna get some days like that every once in a while. Well, luckily yesterday was a real good day, and you get a day like today, and it's like, ugh, that's no fun. But it is what it is. It's part of the business. It was real easy. Obviously, with nobody, everybody being in front of a computer. And just being a trader, not as simple. But software is really, really helpful. That's the key to everything. And the most important thing, you've got to trade the signals. You got to stick with it. They're not going to stop working today after it's been so great for 20 years. It's just, it'll still work, even though you might have a losing day or a couple of losing trades, which I'll guarantee will happen. That's a guarantee. You have to just trade the charts, not trade the charts and the Able Trend signals. Don't trade your emotions. That's a guaranteed way to lose. I mean, no chance of winning. Certainly not consistently. If you trade your emotions, no chance. You, me, you, everybody, we all lose if we trade our emotions. There's no chance of winning. So that's the key, is to put your emotions aside and just, trade the charts. We averaged, 4 out of 5 winning days. So, you get 3 days in a row. So far, the first 3 days of the year, fantastic. I mean, yesterday was a huge winning day. Today, terrible. But nobody can control the market. So let's take a look and see what we got. This is a daily, weekly S&P 500, because many people use the software for the retirement accounts and long-term positions. After the big uptrend from about 3 months ago, we had the buy signal. Then we were stopped out right here. You can see clearly the prices go under the blue dot. The thing is, we want to get in on the first triple confirmation trades, and we just put the stop loss on the second lower small blue dot below the price, which would be right here. So we were stopped out, or it looks like we were probably ticked out right about there. And if not, certainly over there. But once you stopped out, triple confirmation, sweet spot, right back in again, right there. You got blue bar, blue dot, blue X. There's no other way to get into a trade. You have to have blue bar, blue dot, blue X. And actually, we're still in the trade right now. And this is interesting. How 4 days in the last week or two here, we hit support and stopped. So it's just really cool how accurate the dots are, and they really do block the prices from going lower, as you can see right there. Notice it went down and hit the dot, stop, 3-4 times here now. We're still in an uptrend, so there's been some rocky days here, still in an uptrend, so we're going to stick with it. But S&P, basically the stock market looking real good. Yep. Hey, Michael. Michael's in the room. Hey, all right. Yep. Michael's the. Yep. Look cold, but no problem. Everything's back to normal here. Oh, thanks for saying that, Alan. All right. Yeah. Not a fun day today, Michael. Yeah, you're right about that. But we'll take a look at that now. Let's jump in. So we've got a. This is an ugly chart, isn't it? Ugh. It's been fun watching this, looking at this all day. But, is what it is. We'll look at yesterday and, hopefully you picked up that big move. So let's take a look. So yeah, just right at the open, just ugly. Blue bar, blue dot, blue X, valid trade. Can't say anything, wrong. Stop goes 1 point below the bottom of the first blue bar. 1 point below the bottom of the first blue bar. And it turned around, and we got stopped out. So now we're going short here, although we're not going to take that trade right here. That's a really long bar. We get on the next bar, just put the stop 1 point above, stopped out again. Triple confirmation buy signal right here. Started out okay, turned around, stopped out there. I mean, we're not getting beat up because we got stop losses in place. Now, no trade zone, that helped. No trade zone in here. Well, that was a real big help because look how just up and down. That's a hard show right there. This one worked out okay, triple confirmation. Now, when you're in profit a couple of $100 or whatever you pick, 8 to 10 points, I always say on the NQ. Now you got two greens. Let's just put that stop 1 point below. The stop would be here. Second lower small blue dot below the price. Second lower row of small blue dots below the price. And now we're going to move it up closer because, heck, we got 15 points in this trade here. That's $300, and that's just going to help to make up for some of the earlier losses. So that was a good one right there. That one really helped a lot. It helped us get back to some of the earlier, supreme choppiness the first couple of hours there. Two green bars in a row. Again, you've got to be in profit. Some people make the mistake. They go, "Oh, there's two greens here. Do I put my stop?" No. You're only in profit, 2 or 3 points. We're not here to make 2 or 3 points. That's not going to cover it. There's expenses, there's commissions, and there's going to be losing trades. That's for sure. So 2 points, 1 point below the bottom of the two green bars. Stopped out on the next bar. Okay, that one worked out good. So that really helped a lot. But rest of the day, triple confirmation there. We're stopped out there. Again, 1 point below the bottom of the first blue bar where you have the bar you get in on. That's as simple as that. And it's just, we don't like to trade now. First 3 hours and the last 2 hours. Everybody's in different time zones. So the first 3 hours, I'm Eastern. So the first 3 hours is 9:30 to 12:30. And then the last 2 hours, 2 o'clock to 4 o'clock. Stock market hours. The first 3 hours, the last 2 hours. That's the 5 hours a day we suggest trading. Those are the best 5 hours. And we did a lot of research on that. But again, triple confirmation here. That was a stop out. Triple here, stop out. Fortunately, there were a lot of no trade zones like here, where we did skip some of the choppiness. Now this was during the dead zone, so. But just want to point it out, just in case somebody was trading at that time or wants to see what it looks like. And then here's at 2 o'clock, well, the final 2 hours. It's 2 to 4 Eastern, so everybody's around the world here in different time zones. There's your triple confirmation sell. That one worked out okay. We've got 10 points into the trade right here. 2 green bar, stop. There's 2 greens in a row. Put it 1 point above. We're stopped out right there. So we get back 10. It was plus 10 points on that one. Triple confirmation short there. Stop goes 1 point above. We're stopped out right there. Triple confirmation right there. It was about a break even, maybe even a loss of a point or two. And if you weren't beat up by then, you're still around by the end of the day. We usually get some nice trades at the end of the day. Yes, Cheryl, good question. For daily stock, daily, weekly, your stop is second lower small blue dot below the price. If there's no second lower row, if there's only one row of blue dots, then just put a couple pennies below that blue dot. Yep, good question. And then at the end of the day, we actually had a nice little trade. And we usually, I always say the first and last hour are the best, although we trade for the first 3 hours and the last 2 hours. But quite often, the first and last hour is the best hour. And today, the last 15, 20 minutes or so worked out because we had a triple confirmation sell signal, and we took that right into the open, right into the close, which here is 4 o'clock Eastern time, and technically the market closes at 4:15. So if you hung around a few extra minutes, that's fine. But make sure you're out before then, because then if you don't have that much money in your account, you'll get a margin call. But right over here, this worked out real nice, because that was like about that was like 18 points. I mean, that 18 points is $360. So you can call it 15 points out of it. That was $300 we got back at the end of the day, which certainly helped for the early choppiness. But we're still minus on the day. And then yesterday was, just look at this real quick. Nice trade at the open here. Now that's a really long bar. Tough to get in on those long bars, but if you got in on the second or even on the third, but any one of these bars, that would have worked out fine. But technically speaking, that's what we're looking for, triple confirmation. And then up and away, that went very nice. I mean, that first trade was great yesterday. It just kept on going, stayed above the blue dots. Now, if you got this is a valid two green bar stop out. Which you get stopped out right there, but you're looking at 30 points, so that's a $600 winner right there in 20 minutes. I mean, just zoom, it was great. Here's a sweet spot right here, because it went down, hit the blue dot, so get right back in on the sweet spot. There's your two green bars, and we'd be stopped out right about there, because the stop would go there. So that was another 15 points or so. The first trade today was really just that was you got to catch those. I know it's hard to stay in them, because when they pull back, you're thinking, I'm going to get my money back. Again, that's where you're trading your emotions and not the charts. Just put the stops in, go at it. 3-9 chart was much different. Yes, Don, it was 3-9 was much different. I always suggest the 1 minute 1, 2, 3 chart, especially the first and last hour. Always the 1, 2, 3 chart, the first and last hour. If that first hour is really choppy like it was today, you want to flip over to a 3-9. Perfectly fine to do that. That's perfectly fine to do that. I just kind of use my judgment on the sweet spots there, Rick. But you're like, I don't know, maybe 2 points, a point or two away from the dot right here. And if you didn't get back in again, okay, that's fine. It still was a really good, like a 30-point winner on the first trade there. All 3 trades right here. 2 of them were break evens. This was a losing trade. Gave back about 5 points. I like to zoom out. Sell signal here is a break even. This is all what we call the dead zone in here. And we're going to, obvious long trade right here. That worked out really nice. We're up about 15 points there. So we're going to use the 2 green bar stop. Get stopped out right there. That was a real good one. Would you enter a trade on a sweet spot if you missed the original signal? Yeah, you can do that, Greg. Yes. You're taking on more risk, because you're getting in at a much, you're not getting in a much worse price. For a buy signal, you'd be getting in at a much higher price. So you're kind of chasing after a little bit, but it's a valid trade. Sweet spot, yes. That was a really good trade at the end of the day here yesterday. The same thing like today, that last 20 minutes, it was just, that took off like a rocket. Triple confirmation buy signal. The key is to just, trade the charts. It's hard, I know. Believe me, I get it. Not trade your emotions, but can't win trading emotions. There's just no chance. So the more you can lean on it, I mean, the better you'll do. Rick, to use a sweet spot to add to a position, I use a 233 500 tick. I want to just keep it a little simple here today, but like here's a tick chart. I use a 233 500 tick for the sweet spots. So just use the tick. If you're saying, well, I don't know if it's a sweet spot, I'm not sure. If the tick is in the same direction, you're in. This is just how I like to set it up, and it's just totally personal preference. I just keep the 3-9 in the upper left corner just to get the bigger picture. And then, of course, the tick chart is right here for the sweet spots, but here's your main chart that is trading off of the 1, 2, 3. So 4 days in the new year, you know, got 3 winning days and 1 losing day. So that's okay. That's about average. Nobody likes it, and I certainly don't like the losing days, but that's part of the game. Okay. I don't like that rule. I don't do that. I don't care for that, Rick. And Rick's saying, do you add to the position on a sweet spot? I don't. You can do that. Certainly you can. That's perfectly valid. I would do that longer term charts, like daily, weekly charts. Yes. Weekly, monthly charts, you know, retirement accounts. You're just going to basically buy and hold those for, you know, for months and years. Yes. But I don't like that on the intraday because these trends, they just don't last that long. You know, they're so up and down that I wouldn't add to it. Yeah, it's Ron here, Skip. The voice is got a cold, but otherwise, yeah. But it's much better than it was a month ago when I was having some voice issues. We're much better from that. So thanks for asking. Michael, technically we couldn't take the last trade short today until the 3-minute X when it appeared. Yeah, it could have been. You might be right on that, Michael. Let me see here. Let me just go back to that last trade here today. Here's where you would get in right there, Michael. Actually, you can get in on that one. Again, it closes below these blue X's. Right there. Even if you didn't even have the big X, I mean, you got a series of 2s. You can see it's clearly going down. The big X is coming in. If it's flashing at that point and you're below, right here, you see here, it closes under this wall of this strong wall of support here where the blue X's are. It closes, you know, a point or 2 under that. I always look for that. I like that. I like when it closes under that wall of previous support. You know, you can get in there. And then, of course, you know, it just zooms down from there. But, yeah, that actually was a valid trade. I wasn't watching this live. So, was the blue X there? Boy, I would seriously doubt that the blue X was there on the bar before it. But if this is flashing, and you know, Michael knows what I mean, and if this is flashing and you're under the blue X, you're good to go. If it wasn't, then you're not. So, yeah, you're right. I mean, I didn't see that one live. Phones have been going crazy, but that's a good thing. We've been super, super busy. Oh, yeah, I agree with that, James. Let's have a good 2020. All right. Okay, got to everybody's question. Yep, Frank said yesterday was 200 ticks per contract. Good job, Frank. Okay, Cheryl. Yep, that's fine on the 1 tick. All right. Yep, that's everybody. Michael says, where do we send the throat lozenge? Yeah, you're right. No, all is good. All is good. Thanks for being here, everyone. I hope I was helpful, and have a good night.